So I posted a potential trade opportunity in the Facebook group a few days ago, and it's a trade in the Euro Aussie, and it was a shorting opportunity. Now, it just so happens that that opportunity has now turned into an excellent trade, and since then, I've got a lot of messages and emails asking me to basically talk through how I went about the analysis and how I went about identifying the opportunity. Now, before we start, I want to make sure that you all know that obviously, these opportunities, they don't always work out. So as traders, the best thing that we can do is essentially look to highlight high probability opportunities, look to see how price reacts when it approaches the levels that you've highlighted, and then obviously react to that. And then whether the market makes you money or not, whether that trade goes on to be a winner or not, is obviously completely random from a trade to trade basis. But obviously, if you look at things from a longer term perspective and you take these setups over and over again, and these setups obviously have an edge, then you are going to make money. But you can't sit there and watch this video and think that, you know what, I'm going to go and replicate what Alex has done and I'm going to make money on every single trade. I don't make money on every single trade. I just make money on enough of the trades to be overall profitable. And that's what you should aim to be as well. Okay. But anyway, before we get into that, please make sure that you are subscribed to this channel. So if you haven't already subscribed, please hit that subscribe button and then hit the bell so that you get a notification as and when I release one of these videos. Okay, so let's talk about the trade setup. And what we'll do is let's jump over to the chart so that I can really sort of walk you through what it was that I was looking at, how I identified the opportunity, and obviously how you can go about replicating that and doing that for yourself. So if we take a look at the chart here, we've got the Euro Aussie chart. Okay, and I'll zoom into the, let me zoom into the daily chart here, so you can see exactly what it is that I was looking at. Now, as you can see, I've got a number of different levels in here, but what I want to do is I want to strip this back completely so you can see how it was I went about identifying the area that we wanted to be trading. So I'm going to delete everything off of my chart like that. So we're sat here with basically a naked chart. Yes, I've got a couple of indicators on here, but this setup that I'm going to talk to you about right now is a pure price action setup. So you don't need to have any indicators to be able to trade this setup or to highlight opportunities like this. It's completely based on price action and price patterns. So the first thing that I do when I come to my charts is I try to identify sort of like the bigger levels of support and resistance. Now, remember when I was looking at the chart, it was kind of around this sort of area here. All right, let me zoom in a little bit more. So that was more or less my view when I came to the charts and I found the opportunity. So what I did is I zoom out a little bit and I look for big levels of support and resistance that sort of tend to interact with the areas that the price is currently at or the price is approaching. So the first thing that I saw was that we have this big level over here of support. So support once, twice, 3 times, 4 and 5 times, and then it goes away, then the market comes back to it and it treats it as resistance once, twice, breaks through a little bit, and then it's resistance. So clearly this sort of area here, and obviously I'm trading the Forex market, so there isn't a centralized exchange. So from that perspective, prices are always going to differ very, very slightly. And that's why we look at things like price zones as opposed to specific price levels. Obviously, we'll have a price level in there, but it doesn't need to be pip perfect. And the price action doesn't need to be pip perfect at the level. It just needs to be that price is interacting in and around that zone. So we have this level in here. Then the second thing that I like to look at is I like to look for trend lines. Okay, so I want to see if there are any trend lines that sort of intersect or interact with this level as well, because getting a confluence of levels is so much better, because you have to understand that whilst you do have algos and robots and things like that in the market, you also have other traders and human beings, and they, everybody's going to be a little bit different. Okay, so some people might like trend lines, some people might like support and resistance levels, and what you want to do is you want to bring in as much information as possible to try to make your trading decisions, which is why I won't just say, I'm just going to look at support and resistance levels. I know other traders will look at trend lines. So from that perspective, I want to look at trend lines as well. And if we happen to get an area where we have a support and resistance levels, we have a trend line, we might have some Fibonacci, then we have a confluence of levels, and that just kind of adds to the case to take the trade. It makes it a stronger case to take the trade if you've got a confluence of levels as opposed to just one. So if we look here, we've got the trend line tool in there. I'll put that down there, and as you can see here, I've got a little bit of a trend line. It isn't completely up to that trend line there, but it is something that it's sort of interacting with. And let me just pull that back up a little bit there. So the price is approaching that level. And again, remember I said it doesn't have to be pip perfect. It just has to be in and around that area. So that for me is kind of close enough-ish, all right? It's approaching that level. So we know that when the markets are starting to come up towards this level, they're going to, if the sellers want to get involved in the markets, they're going to think that this is a good place to take a look at that. And then we'll look at it from the downside. So we'll see if we've got anything that we can do here. So we've got a trend line encapsulating this price action down here, as you can see. So we've got a triangle here. We've got 1, 2, 3 touches. The market breaks through it. And when the market breaks through a level, you know, it's not just support and resistance levels, but trend lines as well. It often comes back to retest those levels. So that's exactly what we've got here. So we've got a confluence of levels. We've got the downward sloping trend line. We've got an upward sloping trend line. We've got a support and resistance level. And I'll bet, you know, I don't use Fibonacci that much, to be honest with you, because I find that, you know, I can kind of see it with my naked eye where the levels more or less are. And they tend to, you know, interact with the support and resistance levels anyway. But if you did put if you did use a Fibonacci level in here, if I go swing high to swing low, we can see that that is also in and around the 78.6 Fibonacci retracement level. So all in all, we've got a Fibonacci retracement level, we've got a support and resistance level, we've got a downward sloping trend line, we've got an upward sloping trend line, you know, encapsulating the pullback. So we've got a bunch of levels there. I'm going to take away the Fibonacci because I think it kind of makes things a little bit messy here. All right, so we've got all of those levels there. So the next thing to do is say, okay, so now that we've got those levels, now we need to look for opportunities to trade it. So what you tend to do is you can either look at the chart that you're trading. So this is the daily chart, and you can look for some sort of candlestick pattern. But I much prefer, personally, I prefer price patterns. I prefer 1, 2, 3 reversals, head and shoulders, double tops, things like that. I prefer price patterns as opposed to candlestick patterns. I feel like they just tell me a little bit more about the markets. Obviously, that's my preference. You might be completely different. But if we go across here and we go down to, let me zoom into that chart, go down to the lower time frame. So we've got the hour chart in here. We can see that the markets approach this level. And when it approached the level, we can see that it broke through the level and it rejected it. Rejection is so very powerful because what you get at these levels is you get a cluster of orders, okay? And if you get a rejection, it means that there wasn't the orders above or below a level to be able to be the catalyst for that particular breakout. So if the market breaks through a level, then breaks back through, that's a very, very strong indication of which particular side is in control. So as we can see here, the market broke through, it sold down a little bit. There wasn't an immediate opportunity to get involved in the trade, up here. So there wasn't really the opportunity there. However, if we zoom in, we can see the market then came down and created a little bit of a ledge. And I love these trades here. It's where the market sells off a little bit and then more or less goes exactly sideways, really respecting the support level that it printed on the initial momentum move down. So it moves sideways a little bit. And then the first close we get below this support level is this guy over here. Okay, so we've got this candle over there. It's the first one to close. I'll zoom in for you. That's where you can get short. You place your stop either above the congestion zone like that, or if you're a little bit more conservative, if you want to let it ride a little bit more, you'd place it above the ultimate high over there. So not exactly at the highs, but sort of a few pips, maybe maybe 5, 6 pips above that level. So don't put it on the level. Okay, give the trade a little bit of room to breathe. In fact, I usually, if I don't trade with stop losses all that often, but if I do, I'd actually put it 10, 15 pips above the level because I hate getting whipped out of trades like that. But that's a conversation for another time. But essentially, that's how you trade pure price action setups, all right? Using a confluence of different levels. So using the technical analysis, the drawing tools that you have available for you on every single charting platform. You've all got lines that you can use. It's sort of like the oldest form of technical analysis, but it's still so very, very effective. And that is how I went about picking out that trade that I posted in our Facebook group a few days ago. If you aren't part of that Facebook group, but you want to join, it's absolutely free. I'll post a link beneath the video here, so kind of hop along to that, put in a request. answer the questions there. The questions aren't too taxing. It's just to prove that you're actually a human being. Things like, what do you trade? What pair do you like? Things like that. And just to make sure that, we understand that the person trying to join the group is a real person. So yeah, jump along, join the group, ask any questions that you may have to ask. We'll be happy enough to answer them for you. If you haven't subscribed and you like this video, you like this kind of content, please make sure that you do hit that subscribe button. And also, as I said, hit the bell so that you get a notification as and when I release a new video. And why not? While you're there, just give me a little thumbs up as well and like the video, because that would make me ever so happy. Okay? Any questions, please post it beneath the video here in the comment section. Otherwise, I will speak to you on the next video. Take care now, and thank you so much for watching.